Welcome back. I'm Pratap here. Today is the 5th December 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock homepage. At our homepage, click on the tab posts. You get access to this post. Some of you might be seeing the tab community. Click on that tab. You will get this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1. All the training lessons are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join in the Telegram channel. Each time when we release a new video, we will provide an update in the channel. Okay, now let's get into the analysis discussion. Yesterday, end of the day report, we identified 1, 2, 3, 4, 5, 6, 7, 8. Actually, this is having even 9th one also, because it is having demand and supply trades from daily and 75 minutes time frame. So total 9 high liquidity zones we identified from 8 stocks. And the first one is Hindustan copper. This is having a daily high liquidity supply zone and 75 minutes high liquidity demand zone. And today we got the trade from this 75 minutes high liquidity demand zone. Let's focus on this. Our software identified this as a rally, 2 base candles and a rally candle. And this zone is fine-tuned with 15 minutes, but unfortunately there is no proper 15-minute structure here. Earlier there was ERC candle, 2 base candles and rally. Earlier it was there, but that was violated. Later on there was no proper structure. But you may draw this drop, base, rally. This is created today. This zone was created today. And last minute prices came close to this zone. But anyway, our concentration is something else. And if you go to the 5 minutes time frame, we have a rally, base, rally. Have you noticed? I have drawn type 2 wick. Time being, I am drawing wick to wick. Rally, base, rally. And this zone is tested several times. This is the first test, second time, third time, fourth time today. So this is a high liquidity. Actually 5 times. Yeah, this is the first time. This is the second time. This is third, fourth, and today is 5th. We got the trade. This is a high liquidity zone. 5 minutes high liquidity zone. Okay, based on number of tests, multiple tests, we are assuming this could be high liquidity. But I verified with our software also, supply demand zone chain. That also recognized this rally, base, rally as a high liquidity zone. Okay, trade point of view, type 2 proximal, because prices already entered several times into this zone. So that's why risk has to be minimized. Type 2 level, type 2 proximal entry, we are planning our, type 2 proximal, we are planning our trade. Because high liquidity zones, what is the concept? As long as the zone and prices enters, we will take. And if it gives the profit, we will enjoy the profit. If it is stopped out, okay, we will stop out, because already earlier trades, we might have got the profits. HLQ zone concept is very simple. Every time when prices enter into the zone, keep on taking the trades until one day it will be violated. It will get the expiry period. Definitely not today for this particular zone. Who knows, next time also it may give one more test. After that it may violate, or maybe next time it violate. Anything it will happen. The beauty of HLQ zones, especially the 5 minutes level I am talking. the fine-tuned 5 minutes level or 5 minutes level, you can take as many as possible. But is it a fine-tuned 5 minutes? No. This is just a 5 minutes high liquidity zone, which is inside the 75 minutes high liquidity zone. Such kind of trade setups are called as aggressive trade setups. Why aggressive trade setup? Because this is not a fine-tuned 5 minute zone. Because there is no proper 15 minute structure is available. But still how it is working? Because this is a high liquidity zone, 5 minute zone. Because it is there inside the 75 minutes high liquidity zone, it is having more success rate. Let us assume this 5 minute zone is outside the 75 minutes high liquidity zone, or maybe inside a normal 75 minute zone. 75 minute zone is not a HLQ zone. Or the entire 5 minute zone itself is outside the zone. It is not part of the any 75 minute zone. Even then, these 5 minute zones work very well. They will give multiple tests. Of course, they will be violated sometimes. But what is the difference between 75 minutes and daily HLQ strategy and taking directly trade on 75 minutes high liquidity zones? Because NeoStock software is having a supply demand zone chain. With the help of that, we can identify only 5 minutes high liquidity zones. We can directly take trades on them. Yes, we can take directly on those stocks. Mostly those 5 minute zones will push the prices up to 15 minutes target zone, even 5 minute zones. Then what is the difference between direct trade on the 5 minutes high liquidity zone and the 75 minutes or daily HLQ zone strategy that you learned in lesson 21? What is the difference? The difference is the daily or 75 minutes HLQ zone strategy you learned in lesson 21, that is having 80% success rate. But if you take directly on this 5 minute zone, which is not part of the high liquidity zones, they will also give you multiple trade opportunities, but you can't expect 80% success rate. Maybe you may get 60% or 65% success rate. So that is the difference between taking trade on a 5 minutes high liquidity zone directly, which is not part of any 75 or daily HLQ zone. But look into this 5 minutes high liquidity zone. This is inside the 75 minutes high liquidity zone. But it is not a fine-tuned zone. But still it is okay, no problem. HLQ zone need not be fine-tuned zone. But if it is there inside daily or 75 minutes high liquidity zone, still you can take the trades. They will give you 80% success rates. And how many trades we can take? As long as it is going to be violated. That is our strategy. The day when it is violated, you have to accept the stop loss. But until before, you might have enjoyed the profits. See, let us assume you concentrated only on this zone. How many times you would have got the profit? See, this is the first entry, you got a big profit. This is the second entry, again you got a big profit. Today you got the third entry, again you got the big profit. Maybe next time again you take a trade, maybe that day you may get the profit or it might be violated. Anything will happen. But until then you enjoyed all these profits, right? That's why the day when it is violated, that zone violation, we can ignore that. That is why? Because it is negligible. Compared to all these profits, whatever the stop loss you got, that is very negligible. You can ignore. You not even consider that is a violated trade. That's why you might have observed HLQ zones after multiple tests, when it is violated, I am not considering them as a stopped out trades, because that is the nature. But first time it is violated. Sometimes HLQ zones might be violated first test itself. But first time if it is violated, I am considering that as a violated zone. Stopped out trade. I am registering in my Excel sheet. I think many times you might have observed. HLQ zones, after multiple tests, if it is violated, I am not considering that as a zone violation. Because the nature of HLQ zone trading is, you need to take as many as possible trades until the zone is violated. The zone is that day after one test or two tests or three tests, after that if it is violated, we won't consider that as a zone violation. Directly first entry it is violated, a fresh zone it is violated. We will consider that as a violation of our trade. That comes under our counting, the failure rate. Why we are following like this? Because we never know when HLQ zone will be violated. We never know its expiry date. That's why we are simply following a blind rule. Keep on taking the trades until the day when the zone is violated. But today it gave the profit. We have a 15 minutes target zone. We have a drop base drop. This is the 15 minutes immediately available. It reached. Even the next level also it reached. Here drop base drop also. But anyway, the first one always we consider. Okay, what is the profit Hindustan Copper has given? It has given a profit 7,950 rupees profit, which is a 2.4% ROA. Why only less ROA? Because the future cost is around 3.5 lakhs for Hindustan Copper. So that's why ROAs is reduced. But we have to live with this. Sometimes we may get less ROAs. That is okay. But on average, we will be getting around 6% ROA. Few months we get less, few months we get more. See, last month we have seen, we got 6.3 ROA, we got entire last November month. Okay, this is about the first trade, Hindustan Copper. The next one is Alkem. This is a newly added stock in the recent time. Alkem Laboratories is recently added. In the 45 stocks added into the F&O, right? In that list, Alkem is there. And this is also a 75 minutes high liquidity demand zone. Going to the 75 minutes time frame. So this is the rally, 3 base candles and rally. This is what our software identified. And we have to fine tune this zone. See, here you have important learning in this stock. Everybody please concentrate. Previously also, maybe some 3-4 months back or maybe even 5 months back, I explained this concept. But new members recently who are listening HLQ zone analysis, you may not be knowing. You might be knowing if you listened all the HLQ important videos I kept in important strategies and important analysis and strategies playlist. We have multiple playlists are there. Q&A playlist, our training course playlist. Exactly the same way we have important video strategies and analysis. Any important concept I am explaining in HLQ zone analysis video, those important videos I am keeping under that playlist. Some of you people are listening all those videos from the old video to till the recent. Some of you people are listening because that is the way you gain your experience. So one of those videos, maybe not one, maybe couple of videos or maybe 3 videos, I might have explained this concept earlier. But today please concentrate, it's very important because the fine tuning, it's not fine tuning the zone. Fine tuning the entry, fine tuning zone is different, fine tuning entry is different. Fine tuning entry is a very important concept. If you don't get enough RR, if your risk is very high, at the time fine tuning the zone important. If risk is high, you can also do position sizing. That is another technique. And fine tuning entry is another technique. That is what I am going to explain today. Okay. So those who did not attend this lesson earlier, please concentrate. So this zone we fine tuned in the, so this is a 75 minute zone. Now I am fine tuning in 5 minutes time frame. Here you have a drop, base, rally with hidden body. This is a 15 minute zone. But have you noticed I didn't fine tune with 5 minutes? Why? I will explain later. And here again you have rally, base, rally. And this is a 15 minute zone, rally, base, rally. From this 15 minute zone, the 75 minute zone picked up the orders. This is the lower time frame zone as an horizon to the higher time frame zone. That way we can understand. It picked up the orders. That means this is the area we have strong institutional order flow. Today we got trade from this zone. But this is a 15 minute zone. So that's why you need to fine tune with 5 minutes time frame. Okay. So we have two 15 minutes order flows. This is the first one. This is the first one. This one is created in the recent price action, second one. Now let's fine tune with the 5 minutes time frame. In the 5 minutes time frame, I am not comfortable with this zone. First let me hide this, then you will understand this is a drop candle. ERC candle. See, this is a very big candle. Drop candle and rally candle, in between no base candles. That's why I didn't, because many times these zones will be violated easily, but that didn't happen in this zone. Please remember, it gave multiple tests. This 15-minute zone worked as a high liquidity zone, but unfortunately we didn't find 5 minutes order flow. Without 5 minutes order flow structure, how do you identify your entry and stop loss? It worked. Maybe there could be other reasons behind this. Institutions might have added in new orders which might not have reflected in the price action. That could be, see, multiple times it worked. First test, second test, third test. Actually today third test it gave. Today morning 9:15 candle, see here. Prices entered into the zone, sharply moved up. Probably it gave a very good return. And after that again today, at 9:50 candle, finally this zone is violated. It got the expiry period. This could be a 15 minutes high liquidity zone, but it doesn't have a fine-tuned 5 minute zone. I didn't plan any trades in this area. Okay, but what about here? This is LTF zone, 15 minutes LTF zone. In that you have a 5 minutes LTF zone as an horizon. See here, you have a drop, you have two base candles, and you have a rally candle. But I have fine-tuned up to here, not up to this. The reason is a risk management point of view, I reduced this. If you are adding zone up to here, your risk will be too high. So that's why. Even you can go to type 3 proximal also you can plan. But type 2 is ideal because type 2 means within this base candle, not the first candle. Actually this is the medium size like candle, part of the base. But actual move is started from here. That's why I am focusing in this area. And also this area is also intersected with our HLQ zone area. That means HLQ zone actually picked up the orders from this level. But even then, today at the time of trade planning, we have some issues. How I resolve these issues, you need to understand. What is that? Price entered in this candle. This is the candle. Or maybe you can say this is the candle. First, in this 5 minutes area, in this candle, what is the timestamp? 11:15 candle. Today, 11:15 candle tested. The 5 minutes fine-tuned area. But have you taken the trade in that? No. Why? What is the reason? Because here you have a 15 minutes target zone. Let me show you in the 15 minutes time frame. You have a drop, base, a drop. But we didn't take the trade. Why we didn't take the trade? Because price did not enter into the fine-tuned area. That means the candle structure is completed before we take our trade. Drop, base, drop is completed. Now we have a clear new target zone. Definitely if you take a trade, you need to exit. But unfortunately, if you take a trade, you won't get the ROI. You won't get the RR. Minimum 1:3 RR you won't get. What is the RR you get? If you take an entry here exactly in the 5 minute zone for proximal entry, let me show you. What is the RR? So this is the one. Actually you are supposed to take, right? But what is the RR you are getting? 1:1.79. That means do we need to reject the trade? Many people do that. Reject, RR is not there. But you have a lot of risk is there here. Risk means institutional order flow is there. Because the risk represents the actual order flow, right? So here you have a big order flow. Suppose if prices reach inside and if you take a deep entry, what will happen? Your risk will be reduced. The moment risk reduces, you may get 1:3 RR. You may get. But that you need to verify. For that what I did, I reduced the risk. That means my entry is deep inside. So this is how I plan. The moment I keep my entry here, see exactly I got 1:3 RR. From here to this 15 minutes target zone, I am getting 1:3 RR. But if you plan a trade like this, what is the problem? Many times, not sometimes, many times, price may not reach up to here. Price just go a little inside and then it will reverse and it will be started moving up. That means you will be missing the entry. But anyway, if you are planning to take a trade here, RR is not there. Anyway, you are not selecting this stock. Luckily, if your prices enter into your fine-tuned entry, I am calling this as a fine-tuned entry. Your actual entry is supposed to be here. But why I am saying fine-tuned entry? Because we are fine-tuning the entry in such a way that we are getting at least a minimum 1:3 RR. So the moment I reduced, I am going deep inside. The moment I reach here, this is the level. I started getting 1:3 RR till this 15 minute zone. If prices enter into this area, I'll take the trade. If prices don't enter and before itself it start moving up, anyway I'll be missing the trade. Because of the risk point of view, RR is not there. Anyway, I am not executing the trade. But luckily prices enter, we get a trade opportunity. Risk also reduced. Risk will be less than even 1.5 or even less than 1% level. That is even if it is stopped out, no issues for us because already least level we have minimized the risk. See today, luckily prices enter into this area, we got the trade. Because we got the trade, finally it reached the target. This is how you should plan. If the risk is high, because of that you are not getting RR, what you have to do? You have to take a deep entry. You may ask a question, can we do position sizing by keeping the entry here? Position sizing is okay, that is a risk management point of view. But what about RR? Position sizing is not having any relation with RR. RR is a different concept, risk reward is a different concept, position sizing is a different concept. There is no relation between these two concepts. You have two requirements here. Always your RR should be minimum 1:3. If you are an experienced person, up to 1:2.5 also you will accept. But you are beginners, 1:3 is essential for you. After achieving 1:3 RR, still if your risk is high, let us assume after fine-tune the entry to get 1:3 RR, even after that, let us assume your risk is beyond 2%. Let us assume. In that case, you will be doing position sizing. Why position sizing? To keep your risk within 2% level, not beyond 2% level. That's why you are using position sizing. But RR is related to reward. For accepting risk, how many times reward you are going to get. So that's why don't mix both the concepts. Both are independent concepts, but both should be used in your analysis. Minimum RR is required and risk also should not exceed beyond 2%. Both the objectives you should meet. Anyway, our risk will be within 2% level, less than even 1.5 or 1.3% level, the risk. And now by adjusting the entry, I am calling fine-tuning the entry. By fine-tuning the entry, how we are fine-tuning? In such a way, we get 1:3 minimum RR till this 15 minutes target zone. And finally, prices entered here. The fine-tuned entry level, prices entered. See, it went even more deep, it entered. And then started moving up and finally reached the target. Okay, how much profit Alkem has given? Alkem has given 1:3 RR for us here, but what is the profit? What is the ROI? Alkem has given 4080 rupees profit and you got 4.1% ROI because its margin cost is around 1 lakh. Alkem. That's why you got 4%, 4.1% ROI you got. But what is this concept? This is a 5 minutes horizon. Actually 15 minutes horizon to the 75 minutes high liquidity zone. Inside the 15 minutes horizon, again we fine tuned with 5 minutes horizon. And that 5 minutes horizon, again we took deep entry because of a minimum 1:3 RR achieve. To achieve 1:3 RR, we took deep entry. The moment you moved, you adjusted the risk, you adjusted the entry. That means fine-tuned the entry, you got 1:3 RR. This is the way cleverly you have to plan. Maybe this is the 4th time or 5th time I am explaining this strategy. People who are listening HLQ zone analysis some 4 or 5 months back, they are aware of this. But recently people who have completed the course and are listening the concept, this is a very good important lesson for you. Because these zones, which zones, our LTF zone has a higher time, horizon to the higher time is a powerful concept. Many times we are seeing these zones are working very well. And it is a new concept I developed recently. Many people are not aware. That's why institutions are freely they are keeping their order flows in this area. Because this concept is not known to the outside people. Once it is popular and known to the outside people, then institutions will change their strategies. At that time, this concept may not work properly. But until that time, probably next 2 years, we will enjoy our profits by using this strategy, lower time frame zone as an horizon to higher time frame. Because it will take some time to reach to the entire public about this strategy. So that's why you have seen recent time many zones we are getting successful trades from this concept. Okay, this is about Alkem, and one more trade we got, that is Cyient. Cyient is also a recently added F&O list stock. And this is also a 75 minute zone, but supply zone, 75 minute supply zone. So here you have a drop, base, a drop, and this itself is a leg out, qualified as a leg out, and after that a follow through candle, even much high explosive this is. But this is a drop, base, a drop. Let me hide this candle, you will get clarity. So this is a drop, base, a drop. Because of this very big candle, it looks like a small candle. That's why many times we have to hide when you see such kind of candles. Okay, anyway, our software identified this because software does the perfect calculations while identifying the zones. So drop, base, drop. This 75 minute supply zone we fine tuned with 15 minutes time frame. So this is the ERC candle, rally, ERC candle, because from here it was moving. And all these are all small base candles. 1, 2, 3, 4, 5, 6 base candles, and then a drop candle. This is the 75 minute zone. Inside this 75 minute zone, again you need to fine tune with 5 minutes time frame. I think we identified 2 order flows inside the 75, 2 5 minutes order flows. This is the first 5 minutes order flow, rally, base, drop, and this is already tested once. Type 2 is also just touched. And again you have a drop, base, drop. This is the failed ERC candle, base, drop, and this zone is tested multiple times. That means it is a high liquidity zone. sorry for my mistake. Not about this stock is not high liquidity zone. I was referring some other stock. This is a fresh fine-tuned 5-minute zone. This rally-based drop is a fresh fine-tuned 5-minute zone, and today we got the entry in this stock. Oh, it's my bad. What I said earlier is correct. See, this is already tested. How can we say this could be a high liquidity zone? Did you notice? Rally based drop is created again. Generally, when these LOTL zones will be created, if it is a high liquidity zones, we will see such kind of price action. Why such kind of price action? Because of this rally based drop from this area, it will give you one more trade opportunity, second trade opportunity, because a new order flow is created, rally based drop. You may ask a question, because rally based drop, we have to take an entry from here. No. Where is the origin? Generally, we prefer our trades from that origin only. Suppose between this zone and this zone some gap is there, then okay, at the time maybe we can consider this as a trade. But this is clearly picked up the orders from this area, rally based drop. So definitely next time prices will be reaching here. Several times I told this point. This is one thing. I also looked into our HLQ supply, our NeoStock supply demand zone chain. Our software also recognized this as a 5 minutes high liquidity zone. Okay, but we don't have software access. But still cleverly you can identify this could be high liquidity because there is a LOTL scenario. In the LOTL scenario, a new 5-minute zone is created, but actually orders are picked up from this zone. That means this zone will act as a high liquidity zone because new orders are added in this area. Again, this price action indicates new order flow is added into this area. Because from the origin, the reactions we are seeing. Definitely institutions add new order flow in this area, within this area. See, today it entered into the zone. But where is our 15 minutes target? This is our 15 minutes target. You have a rally, base rally. This is acting as a high liquidity zone, again tested. From here again prices were started moving and we got an entry. Prices came down and unfortunately they failed to reach. But prices moved up, drop base rally. Now new 15 minutes target zone is created. Already you took a trade here. Next time again prices came down from here. Why from here it came down, I will explain again. Some explanation I have to give. First let me finish this explanation. Because the target zone is now changed, revised, it is revised. Whether you have 1:3 RR up to this area, we don't bother. Because a new zone is created. It may not let the prices go below. So that's why you need to exit whatever it is. Or otherwise there are higher chances. From here again it will push, this zone might be violated. Maybe that didn't happen today in this zone. But there is a possibility sometimes from here it will move and it will be stopped out. Instead of getting this profit, you will get the loss. That's why whenever a new zones are created during the live market, immediately you need to change your target. Earlier this is our target. Now our target is this drop base rally. But already we took a trade here. It looks like luckily from here prices reached and again came down and reached the 15 minutes, revised 15 minutes target. Actually, here you have another trade opportunity is there. If anybody missed this trade, they would have got trade opportunity from this zone. Why? Because go to the, we are in 15 minutes time frame. What is this zone? This is just 75 minutes high liquidity zone. This is a 75 minutes high liquidity zone. Inside a 75 minutes high liquidity zone, during the live market, a new 15 minutes zone is created. Dynamic zone. I already explained this concept in lesson 21. Dynamic zones means the zones created During live market, we are calling them as a dynamic zones because they may give you new trade opportunities during the intraday. If they go back, they will give you opportunity. That is what happened in this stock. See, there is a drop, rally base drop, the 15-minute zone. Actually, I have to drop the 15-minute zone like this. This is the 15-minute zone. Yeah. Because this is a rally candle, right? You have to draw like this. Rally base drop. Now again LOTL zones. This 15-minute zone and this 15-minute zone. But this LOTL zone, again a new fine-tuned 5-minute zone is available. And this 5-minute zone is not originated from this high liquidity zone. That's why we are drawing. If this 5-minute zone prices are originated from this 5-minute zone, we would have preferred our trade here. Already we took a trade here today in this candle. After that, while going down, again rally based drop is created. Within that area, you have again a new fine-tuned zone. See here, drop base drop. See, this is our order flow. This order flow is not originated from this 5-minute zone. That's why I have drawn this as a separate order flow. But why I didn't draw here a separate zone, rally base drop? Because this 5 minutes order flow is originated from the main source. What is the main source? This 5-minute zone. That's why always I prefer my trade here. But when it comes to the dynamic zone created today, the 5-minute zone, see this zone order flows? The zone order, don't look into the leg in or leg out. Look into the zone high and zone low. Do they originated from this 5-minute zone? No. This 5-minute zone is ended here and this zone is here. There is no relation between this 5-minute zone and this high liquidity 5-minute zone. So that is the reason why during the live market I have drawn this zone. Drop base drop. Prices came down and again it reached into this area at 10.25. You can take again a fresh trade from here. But we are already in this trade here. If you are already in this trade, our money is already blocked in this trade. You can't plan another trade here. Of course, if you have extra money, definitely you could have taken one more trade in this zone. Now this trade and this trade, both you would have exited here. And moreover, this drop base drop risk is very, very small. That's why you got 1:4 RR you got. From here to here, you got 1:4 RR. But see here, from here to here, you got only 1:1.5 RR because here risk is very high. Because of bigger risk, your RR is reduced. Because of the small risk, you got 1:4 RR here. So that means 2 trade opportunities it has given. This is the first trade opportunity, but unfortunately, before it has given the second trade opportunity, we didn't close our first trade. Why we didn't close? Because up to here, we didn't reach 1:3 RR for the first trade. At least minimum 1:3 we expect to exit the trade. From here to here, it gave you only 1 point, maybe 1 point close to 1:2 RR it might have achieved. That's why you will still hold. Because you know sometimes prices will go up and again came down. But what made here something difference here? Here you can't wait for this 15 minutes target. The reason is during the live market, a drop base rally 15 minute zone is created. See the drop base rally. Because of this, whatever the trade you have taken in this zone, today whatever the trade you have taken, for the trade, initial target is, this is the one at the time of planning the trade. But after taking the trade, a new 15 minute zone is created. Now, whether you achieve the RR or whether you doesn't achieve the RR, at any cost, you have to exit at this newly created 15-minute zone. That means our target is changed. So that's why we have to exit here. Those who took the trade here, they will exit in this drop base rally. Those who took the trade in this rally based drop, they will also exit in this drop base rally. Very simple. Even though the profit is small bit from here to here, but we got 1:4 RR we got. Okay, what is the profit? Cyient has given. Cyient has given 4,755 rupees profit, which is 3.7% ROI. Because this margin cost is, I think, around 1.5 lakh something is there. That's why compare it to the earlier one, you got a little less, 3.7% ROI. So these are the 3 successful trades today. And there are a few more zones are violated, but we won't consider them. Why we won't consider? I will explain. Let me start with the next one, Hindustan Petroleum. Hindustan Petroleum, we have daily high liquidity supply zone. Yesterday our software identified the stock near daily high liquidity supply zone. Go to the daily time frame. Here you have drop, one base candle, medium size leg candle, part of the base, and then drop. This is how our software identified. And within this zone we fine tuned with 75 minutes time frame. 2 75 minutes order flows are here. You have a rally base drop, and again you have a rally base drop. And both these order flows we need to fine tune with 15 minutes time frame. Go to the 15 minutes time frame. Here you have a 15-minute zone. This is the ERC candle as well. Again you have 1, 2, 3, 4 base candles and drop candle. But somehow I am not comfortable with this structure. Still I have drawn some kind of compromised and drawn this. But 5-minute structure is clearly very bad structure. That's why I didn't fine tune this 5-minute zone. So that means this zone will be easily violated. But anyway, why I did not fine tune I will explain. But before that, we have to draw one more 15-minute zone here. See here, we have a drop, 3 base candles, and again a drop candle. This 15-minute zone. Now let us fine tune with 5 minutes time frame. See the bottom one, we have an excellent fine tuned 5-minute zone. We have a drop, we have a base candles, and again you have a drop candle. Drop, base, drop. So we have a fine tuned. This is the area we are planning our trade. But what about the one more upper one? The structure is very bad, 5-minute structure. The reason is look into this candle. This is a failed ERC candle. This is another, high explosive candle. In between, no base candles. Even if you consider all these base candles, rally 1, 2, 3, 4, 5, 6 base candles, you can consider. But this is, see the big wick. This can't be considered as a base candle. This is not even a medium. See, this is the medium size leg candle. You can include part of the base. But this one is definitely not a medium size candle. This is a large candle. So that's why such kind of zones will be violated easily. So didn't fine tune with any zone. But this is the one where you can plan your trade. But unfortunately, price did not enter into that area today. Look into today's daily candle. The price is outside this zone. Next one is State Bank of India. This is also a daily high liquidity supply zone. Did I explain SBI earlier? I think previously I explained SBI. So I don't want to focus my time on this again. This rally based drop. Already I explained how I fine tuned. Please refer the earlier videos. Today price did not enter into the fine tuned area. Next one is Tata Elxsi. Tata Elxsi is at again 75 minutes high liquidity zone. Daily high liquidity zone. We have a drop 1, 2, 3, 4, 5 base candles and again a drop candle. This is the daily zone. Fine tuned with 75 minutes time frame. We have first 75 minutes order flow, rally base drop. Second order flow, drop base drop. But have you noticed both the order flows I did not fine tune? Why? The 15 minute structures are not good. Go to the 15 minutes time frame, you will understand. Here rally, drop 1, 2, 3, 4, 5, 6. Candles are there. But still why I didn't consider is this entire 75 minute zone is also same as a 15 minute zone. That means risk is too much. If you go to 5 minutes, you will get better clarity in that area. You will see the real problems in the 5 minutes area. See here you have a drop, base, drop. Again another drop, failed ERC. Again another drop, in between no base candles. So this structure will be easily violated, a very bad structure. So this is the reason why I didn't plan. But what about another 15 minute zone? Why I didn't draw here? We have another 75. Here also you see, the structure is very bad. All these base candles. Here you have a failed ERC candle. It's a ERC candle. This is another ERC candle. In between no base candles. Such kind of zones will be violated easily. Such kind of zones will be violated. So that is the reason why I didn't have any interest on this particular zone. Didn't plan any trades. See, this first one is easily violated. Why? Because it doesn't have any order flow, proper order flow in this area. We know that they will be violated. Maybe after tomorrow or after 1 or 2 days, the top one also will be violated. This whole HLQ zone will be violated unless institutions create a new 15 minutes and fine-tuned 5 minutes order flows in one of these areas. Anyway, this is violated. They may create a new 75 minute zone, inside 15 minute zone, inside a 5 minute zone and push the prices down. If that is the case, next time in the retracement we get trade opportunity. But otherwise this zone will be violated easily. Alkem we discussed. Cyient we discussed. And next one is Prestige. In Prestige Estate, this is a 75 minutes high liquidity supply zone. So we have a drop, 1, 2, 3, 4 base candles, again a drop with hidden body. This is a drop candle. So this is a hidden zone. Our software identified this zone. Because there is a hidden body, leg out should be added. So it's a hidden zone. So this is a high liquidity supply zone. This one I want to fine tune with 15 minutes time frame, but a 15 minute structure is very bad. See here, you have a drop candle, you have a rally candle, again you have a big raw drop candle with the hidden body. you have a drop candle, you have a rally candle, you have a drop candle. Where are the base candles? There are no base candles. Generally what happens, this zone should be violated easily. But if you analyze properly in the 5 minutes time frame, an interesting observation in the recent price action, within this zone, see, the leg out was created. Prices entered, a rally candle, 2 base candles and a drop candle is created. Rally, base, drop. This is the 5 minute zone. You may ask a question, what is the speciality of this 5 minute zone? This is not a fine-tuned zone. If this is not a fine-tuned zone, easily this zone will be violated. That's true. But what I did, I went to our NeoStock supply demand zone chain for this prestige. Then I found this zone in that supply demand zone. I found this zone as a 5 minutes high liquidity zone. This 5 minutes high liquidity zone is there inside the 75 minutes high liquidity zone. And this trade you can plan as an aggressive trade setup. Because 5 minute zone is there, aggressive. The 5 minutes high liquidity zone need not be a fine-tuned zone. That is what I explained you in lesson 21 in aggressive trade setups. The 5 minutes high liquidity zone need not be a fine-tuned. If it is fine-tuned zone, it could be even much stronger. But anyway, this need not be a fine-tuned zone. But it should be part of your high liquidity zone. Our high liquidity zone is 75 minutes time frame. So this zone is part of that zone. It should not be below the zone or it should not be outside the zone. Below or outside also you can take trades, but success rate is not 80%. But if this zone is inside this 75 minutes or daily high liquidity zone, definitely the trades from this zone might be having 80% success rate. Rarely they fail, 20% scenarios. Okay, today we didn't get a trade, but yesterday we got a trade from this zone. Yesterday prices entered into the zone. See here, almost close. Yesterday at 3:30, prices reached near the zone and then started moving down. And today it continued and reached this target zone. So this is what you should understand, the power of the zone. But today price action did not enter into the zone. Go to the daily time frame. In the daily time frame, this is a pre-market open. That's why it is showing we got a trade here. But if you go to 75 minutes candles, this is a today's 75 minutes candle. And the last one is RBL Bank. This is also a daily, 75 minutes high liquidity supply zone. And this zone is having a 15 minutes fine-tuned zone. Here it is having a drop, base, drop. This drop, base, drop is also a high liquidity zone. The 15 minute zone is a high liquidity zone. Inside that again fine-tuned with 5 minutes time frame. That 5 minute zone is also a high liquidity zone. Here you have failed ERC candle as a leg-in. You have 3 base candles and a drop candle. This is a fine-tuned 5 minute zone. This fine-tuned 5 minute zone is a high liquidity zone. That's why it tested multiple times. This is the first test. This is the second test. This is the third test. When third test? Thursday, 7th November, not today. Today is 5th December. So this is the third test. And today it is violated. Because every high liquidity zone will be having expiry period. So today it is stopped out. If anybody took a trade from this zone, it would have been stopped out today. You have to accept the small loss because before that we enjoyed profits from these zones. What is the HLQ zone strategy? the 5 minutes time frames until it is violated. You keep on taking the trades and enjoy the profits. One day it will be violated. That stop loss, you just need to ignore it. That's it. That is a simple strategy for HLQ 5 minute zones point of view. So this is the HLQ zone analysis from our previously identified stocks. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.